Yo, what's going on, Intellectual Savage family? I appreciate the over 2,300 subscribers who have subscribed to the channel. Y'all already know I'm definitely grateful. And, just we always got to do an audio check. If you can hear me clear or you can't hear me, y'all let me know in the comments. I'm Marcus. You're at the channel, The Debt Free Dad, where we're talking financial takes, financial topics, attorney reactions, and just giving gems and letting y'all know what we're doing as my family is on the road to financial freedom. We started in 2020, paid over 200K of debt off, and we still got more to go, but we see the finish line. We on like the last leg of the race. We see the finish line. This is going to be a unique video, but before I dive in today's topic, I got to just give a quick story. My son had me rolling today because this dude is going to a high school dance, right? So he's going off. So I dropped him off at his high school dance. And this dude came downstairs looking like real extra light skinned Billy D. Williams, the Barges. I mean, he had his little hair curled and he had an earring in his ear. And I was just looking at him like, who is this dude? But he's going on his first high school dance. So I told him, I was like, hey, whatever you do is over at 10. It's over at 10. Don't call me because I'm not coming to get you. I just do drop-offs. You figure out a way back. You got Uber and all of that stuff. So it was interesting. It's something fun for him. And it's something to let me realize that, like, damn, I'm getting old. I was really excited about him going to his first dance. Weight of the roles is reversed, and it's my daughter's time to go to her first dance. Nah, that's going to be a problem. But, that's a whole nother story. Now, in today's video is going to be a dope video because we're going to talk something that is an interesting subject and it impacts everybody. We're going to talk about taxes. Y'all saw the thumbnail. The IRS issued a warning saying that, expect your tax refund to be less. So there's a lot going on in legislation with the laws with taxes right now. We're going to talk a little bit about it. Now, I will give you the disclaimer. I am a licensed attorney, but I'm not your attorney, so this isn't legal or financial advice. But I do specialize in financial investigations. I've took a bunch of tax law classes on business tax, corporate tax, partnership tax. So I have some working knowledge in the area, but by no means am I an accountant. And I'm going to be honest, when I'm investigating or prosecuting things like that, I get a general overview of the information, but then I lean on the auditors and the CPAs and the tax specialists to enlighten your boy, to give me that clarity and that granularity. But we're going to talk about some of the things that the IRS is warning that's going to cause or could cause your tax return to go down. With that, I have a special guest on today, the Self-Employed Tax Guy. If you look in the title of this video, his YouTube channel is tagged. And this brother has been giving financial gems in the tax arena, in the entrepreneurship arena for some time now. It's interesting, too, because I can't wait to get his point of view on should you file an LLC with your business? Because one of my subscribers actually asked me that question. And I was like, you know what? This guy is the perfect individual. Brother Tyrone Gregory is the perfect individual to give some granularity on that. So without further ado, want to give a big round of applause to my guest, the Self-Employed Tax Guy. Let's go ahead and tag him in so he can give an introduction, tell a little bit about himself, and let y'all know where y'all can find him at. What's
Man,
going on, brother? How you doing?
what is happening, family? What's going on with ya?
Hey, man, I'm hanging in there. Blessed, brother. How's everything going on with you, man?
Oh man, hey, as long as I'm above ground, man, you'll never hear me complain, right? Because as long as I'm above ground, I got an opportunity.
Hey, facts, man. Facts,
Yes,
man.
sir. Yes,
So,
sir.
so go ahead and tell the folks a little bit of information about yourself, your background, and all of that stuff, so they can get an understanding of just who you are, and let them know where they can find you at too.
Oh, hey, not special about me, man. Well, my name is Tyrone Gregory, the self-employed tax guy. Man, about me. Let's see. Well, first of all, being the self-employed tax guy, I'm the CEO, owner of the self-employed tax company, where my mission is to help minority-based entrepreneurs really understand the back end of business and help them become successfully self-employed and start sustainable businesses. See, the greatest thing about me, man, is the fact that, like you, brother, I'm happily married and have three amazing kids. And man, I heard you said about your son, man. Billy D, really?
Man, he came downstairs. I was like, "Who's this light skinned dude?" He had a little curl going on, man. And he's like, "Yo, Dad,
Oh,
could you tighten up my part in my eyebrow?" I was like, "This dude."
oh man, my son do the same thing. The eyebrow, the part he got to have too, and he got to be
Yeah,
yeah,
man.
bro. I get it, man. Yeah. So that's pretty much it, man. I'm a simple man. I try to keep things simple. Um, and just have fun and enjoy life, right? Because that's the point. Like, what's if we not enjoying it? What is the absolutely point? As far as my background, man, I've been in this tax game a little over 14 years, but this isn't an industry that I chose. I'm gonna say it chose me because technically I love working with my hands. I started off in construction, doing construction work. I've always loved entrepreneurship, always loved being my own boss, being my own businesses, probably started more businesses than I should have. But with this particular business doing construction, got audited. Me and the wife went through, that whole audit process with the IRS, and I made a vow. And I was like, you know what? I'm gonna learn how to do this so I'll know what I'm doing going forward. And once I took the course, took the training, and realized that there are so many things that we are not taught, I became obsessed with it, man. So I completely left construction, and this has been my field for the last 14 years going.
Nice, nice. It's dope that you say that. You know, my father was he was the biggest financial. Maybe one day I tell a story. I would get him on, but he cussed way more than me, man. I don't know about that. But he was the biggest financial story I ever seen because I remember he went from I can remember him like being homeless, living out of his car, and 2
Uh,
years later, he had a big rig trucking company where he made over $300,000 profits, had 3 trucks, a few drivers, and so,
man,
and it was funny because one of the things he always told me, he was like, "I always had to work for myself because I have, SNS. I suffer from a severe case of SNS." Um,
SNS.
yeah, slapper syndrome.
Oh, okay, okay.
He was
Yeah,
like,
he needed to be
yeah,
self-employed at that
he was
point.
like,
Yeah, okay.
I get fired a lot from jobs because I'll take too much from nobody. So self-employment was something that he's done. I mean, I can remember him having a job for maybe being employed, a W-2 guy for maybe 5 years since my
Gotcha.
lifetime, and I'm in my 40s. So that's definitely a good route, and it'll allow him to make a transition from again homelessness to three
That's
hundred
dope.
thousand dollars a year in profit.
That's dope. Yeah.
That's amazing, man. So let me ask. I like to always ask a little bit about your background. And
Yeah,
you
yeah.
told
Let's
us,
let's talk about it.
yeah, we talked a little bit about hey, you were a construction guy. You were good with your hands, but this game kind of chose you. So coming up, give us your financial background. We got some guys from the School of Hard Knocks. Some people aren't from the School of Hard Knocks, but at the end of the day, we all want the gym. So, what's your background just from a finance standpoint? Those lessons that you may have gotten or not gotten as you came up.
Man, my financial background is the fact that I didn't have one.
Mm,
That when we talk about childhood, man, I grew up South Central Los Angeles, Watts, went to school in Watts, so I had the basic education. My family, gang bangers and dope dealers. We talk about money. It was about moving weight. It
right.
wasn't about entrepreneurship. It wasn't about anything. But I try not to say, between me, you, and the people listen, when I got involved and like started learning that type of financial education, I was like, I wasn't liking the results of the life I was living. So I had to
Right.
make that transition.
Right.
But
Right.
like, we didn't have financial conversations in my household. I didn't have financial conversations with my parents. Both my parents, welfare recipients, growing up, basically barely making it, living check to
Right.
check. None of that. Right. So growing up as an adult, man, I made so many financial mistakes. Right? I remember you got my job in sales, making money, hand over fist, right? First thing I go do, I'm buying bottles at the club. I'm buying the bar, right? And money. Soon as I make 80,000, I spend 80,000. Well, like I had no financial discipline at all. It
Right.
wasn't until I got married and my daughter came into the world and I had to
Mm.
really sit back and look and was like, man, I screwed up.
Right, right,
Like,
right.
I got us living like terrible. It was like at least 10 of us in a one-bedroom apartment.
Mm.
You know what I'm saying? I was like,
Right,
"Nah,
right,
I
right.
can't have my daughter growing up in this environment." So I made the decision to really start learning and educating myself on what it means to be financially stable. What's the difference between making money and being wealthy, right? Like, how
Right,
does money work? And so now I make that a point to teach my children everything because it wasn't taught to me, man,
right,
at
right,
all, you know?
right,
So, but, and again, I'm not saying that to knock my parents, and I hope that anybody listening who grew up in similar situation don't knock their parents because I realized, when I met my family and my father's father and my mother,
right,
who taught them? Like, nobody taught them, so they couldn't teach
right,
us.
right,
You know
right,
what I'm saying? So it
right,
was like at
right,
first I was real upset and mad that nobody taught me this, but started doing my history with my family. And it's like, man, yeah, we just don't have those conversations. So it's kind of like I'm being that change I want to see. I'm being the one that's breaking that curse.
right,
So I'm telling everybody, even when my son bring his homies over, I'm like, yo, how much y'all know about money?
right,
They're like,
right, right,
"Oh,
right, right,
dad." I'll be like, "But yo, you gotta your friends should know as much about money as you do. Because
right,
when you move, you want them to move the way you want them to move with you. You
right,
can't go
right,
to Dubai and be like, hey, I'm about to go to Dubai, y'all going there, be like, oh no, man, I ain't got no money. You know what I'm saying? You want your boys to be with you. So everybody needs to understand that financially. But that's what I'm on right now. So yeah,
okay.
forgive me, I'm long-winded in
Nah,
that
nah,
in
it's
that
all good,
regard.
brother. We got time, man, and that's dope, man. It's funny because I was like, damn, it sounds like you telling my story a little bit there, man. You know what I mean? And all my family who watched this channel, they kind of know what it was. But my brother, we grew up same household, same situation, and he passed away last year
Oh
due to some
man,
street stuff.
condolences.
But
Ooh,
that's what the results of that type of life are. You know what I mean? So
right.
is dope when you can grow up in that environment and turn that corner, see something different to make you do something different. So I definitely understand that. And that's the other thing too. It's funny. Me and my father just had this conversation literally 15 minutes ago before we jumped on here, and we were talking about insurance.
Mm,
And he was like,
mm,
I never really was big on getting the big insurance policy. I got something
mm.
just to cover the funeral costs because my view is the house I got is paid for. So my family got something. And I was like, and I said, hey, that's a big deal. We do the best with the information that we have. You know what I
Absolutely,
mean? So I
absolutely.
definitely think that's dope, man, and much respect to your background and just, you giving them gems and passing them along because we definitely need that in our community, champ.
Oh man, I should to you too, because you're doing the same as me, man. Just trying to help us, especially our community, our people, get this knowledge and education that we need, man. So that's why when you invited me on, I'm like, for sure, because it's not too many of us that's giving out the genuine gems.
Right, right,
Everybody,
right.
like a lot of the influencers out here trying to help people get
Yeah,
rich quick and
yeah,
and it's
yeah,
killing
yeah.
us and we
Hey,
don't
yeah,
even know it, bruh.
yeah, man. That's like a pet peeve of mine, man.
Woo, don't
Like
get me
the
started.
the 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 the, the people pumping up the pump and dumps and doing all of this stuff. And like, I don't know if you checked out. Shout out to my guy, the Pocket Watcher with JT. But did you see his video he did Wednesday? He was talking about. I think his name is Ian Dunlap, EYL guy. I don't know if you're familiar with him,
Yeah,
but
yeah, I catch
he
a few. I don't watch
he,
them
he, he
religiously.
reviewed his top 3 or 4 stock picks of 2022 single stocks, and the video was like why single stocks isn't the best route to go. And all this dude's top picks, man, look like a bloodbath on the screen, red, red, red. And so that's one of my things, man. Like even with options trading, I understand options and I know how to do it, but it's too risky for my blood. So
Right.
I don't play with it. I got a Reddit right now, a screenshot. I'm in a Reddit group of finances where a guy lost like $30,000 in like 3 hours on a put option. And he said it. He was like, oh, I just lost all my life savings. And I was like, ouch. I was like, damn,
Ah,
isn't that funny? But is a risk reward thing. And I'm an attorney. I'm risk averse. I always
Right.
want to limit my risk, limit my liability. So I definitely
Absolutely.
get you with that. Now let's take a turn, and we're gonna talk a little bit about some IRS stuff, some tax stuff. Okay.
Oh, let's get
Now,
into it.
this I think this first topic. Okay, we're gonna talk about the $80 billion that was passed in the Inflation Reduction Act to
Hmm.
fund the IRS. Now, the breakdown of that $80 billion, it was 45% to enforcement, 45 billion to enforcement,
Hmm.
25 billion to operations, 4.8 billion to tech, and 3.2 for taxpayer services.
Hmm.
Now, when you talk about enforcement, that's probably my area of expertise as an attorney when it comes to, investigations, enforcements, prosecutions, all of that type of stuff. But there's a big debate on this. So I wanted to get your view. So to give the recap to the audience, the Inflation Reduction Act passed $80 billion to fund the IRS. Now, the thought behind this was it's more agent to go after wealthy people who are avoiding their taxes. Now, fast forward a few days ago, Republicans, now that they have control of the House, they passed legislation where they want to reduce that by $72 billion. They only want to give the IRS $8 billion. And they have different reasons. Democrats are saying that this $80 billion is going to target the wealthy. Republicans are saying that, hey, this enforcement is only going to force enforcement on more middle class and lower class people. So, what are your thoughts on that process and that argument?
Man, from I have two perspectives, right? From a
Mm-hmm.
tax perspective side, me being a tax preparer, I was happy that they was getting $80 billion to help them out because it was hard for us to do our jobs effectively because we as tax
Right.
professionals had the hardest time trying to
Getting
communicate
through.
with the IRS, right?
Yeah.
So getting new agents would allow us to be able to better serve our customers. So that's why I was kind of excited about that side. And on I'm gonna say let's bring it to the hood side. The people who got scared, oh, we about to get audited. It's like I get where the fear comes from.
Right.
However, if we're doing everything right that we're supposed to do, what we worried about?
Facts.
So it's kind of like even when they was talking about the Democrats, oh, this money, I'm sorry, the Republicans saying, well, this money is going to enforce the lower caste or the lower class. I agree with that because a lot
Mm-hmm.
of times they say, well, okay, yeah, we're going to attack the wealthy and do things like that. It's always the lower class and the poor people who always get the grunt of that,
Right.
right?
Right.
Absolutely. But being the tax professional, me trying to change the culture of my people, is like if we stop lying on our taxes, we ain't got nothing to worry about.
Right. Right.
So
Right. Right.
because to
Can I
me,
borrow your child real quick?
exactly, man, that's like the biggest thing. So when and we both know the finance rebel, our guy Kamari Ellis, man, he
Mm-hmm.
talks about it all the time. Like, the biggest people that get audited are the low income earners, especially the ones in the South who claim the earned income tax credit. That's like the
Mm-hmm.
biggest audit. Well, that's because when it comes to the earned income tax credit, that's the biggest area of fraud in taxes.
Right. Right.
So I get the frustration, I get the argument. Me personally, I think the IRS needs money, especially when we talk about the tech side of things, because they
Right.
haven't
Right.
caught up. I
Yeah. Yeah.
still
They
have
they
to
behind. Right.
fax
Right. Right.
documents to the IRS, bro. I literally
Right.
still have to fax documents to. I don't know what it's. Some people don't even know what a fax machine
Right.
is. Like my kids have no idea what a fax is. They're like, a what? A fax? Like, yeah, no. So I'm on the belief the IRS needs their money to get them
Right.
up to date and get them
Right.
caught up.
Right.
Um, Unfortunately, I get the relationship between our community and the IRS. There's this false image of the IRS being monsters, right? Like, oh, the
Mm-hmm.
IRS gonna come take everything, you going to jail, they snatching it all. When that's, at least in my experience dealing with the IRS, is false.
Right.
Like
Right.
if the IRS, and I'm gonna just be spitting 100% facts, if the IRS is placing any kind of levy or coming after you, you've ignored them for at least 5 years.
Right.
You know what I'm saying? So it's kind of like, yes, the money probably would go to enforce, and like you said, but you're an enforcement, right?
Right.
If it's just an enforcement of the law, if you abide by the law, there, what is there to enforce?
Right.
Or I mean, not should I say, what is there to worry about the enforcement?
Right. Yeah, I agree. And it's funny because, one of the things I immediately think of was like, hey, when Kanye said the IRS froze his accounts. And I was like, man, you know how far in ignoring them you got to go for them to
Man,
say, we're freezing your access to your bank account. That means
yeah,
he agreed 5+ years because they'll send a notice. They'll
after
send, I mean,
notice,
trust me,
notice.
I owed the IRS before. I was like, I didn't reply to that first or second one, but when I got that third and fourth one, I said, man, let me stop playing with these people.
There
I
it
mean,
is. Exactly.
yeah, those are the last people that you want to owe. But it's interesting because the statistics are, and I agree with you. I think they have to find a happy middle. I'm all for
Mhm.
them getting the funding, but people who make $25,000 or less are 2 times more likely to get audited
Yeah.
than someone who makes 200+ thousand. So I would like to see that happy middle. But from an enforcement side, like let me explain, and how complex taxes are. You know,
Yeah.
and I like I said, I've partnership taxed. The understanding of tax law is something completely different. It's completely different from what you do.
Right.
Me understanding tax law, taking classes in tax law is a conceptual thing.
Right.
What you do is a conceptual thing, but you also have that numbers aspect. So I
Right.
don't dive too deep in the numbers. So my thing is, let's say 45 billion they want to go to enforcement.
Mhm.
Let's just break this down. I looked it up. President Trump's tax returns from 2015 to 2020 was over 5,000 pages.
Mhm.
So on average, he got a 1,000 every year. His tax return is 1,000+ pages. You can't take just any auditor or any CPA to do that. That requires someone who's been doing that type of work and has that really unique expertise. And most times, I'll tell you, it's a team.
It
Most
is.
times
Yeah.
it'll be one attorney, two auditors, two special agents, and support staff to
Yep.
handle one case that has a tax return like that. So I think I agree with you. I agree it should be done, but I would like to be able to look 2 years from now and see that, oh, the number of audits done on people making 250,000 or more have increased by this percentage. I just don't want it to target people
Now
who don't
that,
make a lot, black and brown communities. So I think we on the same boat with that one, man.
yeah, yeah, 100%,
I hope
100%.
they get it together, man. Is a good idea in theory, but good ideas and theories, they don't necessarily have the impact that you would want.
And I mean, to be honest with you, just again, on that note, like, okay, now here comes my opinion, right? As
Right.
opposed to just my actual facts and knowledge and things like that. In my opinion, I would hope that they would audit more of the wealthy, because it seems to me that the wealthier people are, the more they try to defraud the IRS.
Right.
You know
Right.
what I'm saying? So it's
Right.
like they should put their efforts towards people making X amount of money, as opposed to the people down here, where we are, that's really not. Because truthfully speaking, like you said, right, you can look at the tax code and understand it conceptually, but trying to make it put
Right.
in fact and put in action, yeah, somebody may make a mistake. But
Right.
is the person that, like, us who are 22% more likely, like, are we doing that intentionally, or is that a mistake, versus
Right.
the wealthy who trying to find loopholes and doing
Exactly.
everything intentionally? You know what I'm saying?
Right.
So
Right. Right.
definitely agree with that.
Yep. Shout out to everybody who joined in the chat too. Prolific Hands. What's up, sis? I see
Hey,
you.
Mr. Prolific.
I see you joined. I see you joined in as well. So shout out to you. Wanted to definitely show you some love, and I agree. My view has always been. I'm just be honest. Like, if a fraud case is less than, I mean, I don't know. I mean, like, I could say a $200,000 fraud case may not necessarily be worth the resources if you got a team of 5 people, all who make over $100,000
Right.
working on a case. So I think you get more bang for your buck by targeting one wealthy person who's intentionally committing fraud versus I would rather have one longer case like that to get a larger recovery as opposed to getting a bunch of small recoveries going after people who claim somebody's child for extra $2,000 or $3,000. That's me from an investigative standpoint. Now, occasionally you still want to do a few of those cases to keep people honest, to let you know
Absolutely.
we are
Absolutely.
looking at this. But in theory, when I go fishing, I like to catch big fish. I don't
Catch
want no
big fish. Exactly.
you know what I mean? So I
Exactly.
definitely agree. All right, so from the next topic we wanted to talk about, we're going to talk about the 1099K, or what is commonly referred to as the $600 rule. Now, I tell you, when this $600 rule came out, so many goons got concerned. Like, wait a minute, what? Yo, you don't know how many people when they saw go across their news feed. If you get $600 or more from Cash App or any of these things, the IRS is coming. Man, my phone blew up. I never had so many people.
Man, you and me
me
both. You and me both.
so-
Like, hey, what this mean? What that mean?
Right. So I'll give y'all the overview. The overview was it used to be $20,000. If you got $20,000, you would have to, 1099K, you have to report this income. But because of the growth of all of these services like Cash App and all of these things where you can instantly transfer money, the IRS and the government felt like they were missing out on dollars. So Democrats, and it went on a party line vote. Democrats said, you know what, we're going to make it $600. Lo and behold, a week before the end of the session, Republicans was like, hey, why y'all going after people for, hey, I'm gonna be honest, I kind of agree with them. I don't agree with them that often. Hey, why are we going this is $600? People who are selling their baseball cards and people who are selling a book on how to budget a savings challenge. And so they wanted to move it back up to 20. The Democrats wanted to go in between to, I think, 10, if I'm not mistaken. Lo and behold, they said, you know what? They ended up nixing it. Do you think that was a good rule to reduce to $600 or not? First of all, you think we should be looking at people's Cash App transactions for $600 or not?
Well, let me start by saying this: the $600 rule has been around for a very long time. It just carried over to the 1099K. The $600 rule has been around, man, for centuries, because that was the rule for anybody who got paid, whether it was a 1099 miscellaneous or 1099 NEC. If you paid them more than $600 a year, you have to fill out that form and report it to the IRS. That's been the rule. They just decided, you know what, we're gonna attach it to the 1099K as well.
Right.
So let me say that. And here's the thing, bro. I'm gonna be honest with you. I was kind of like excited about the rule because as again, I'm talking as a tax professional.
Right.
I would have people sit at my desk and say, here's my W-2 income. This is what I earned. We do everything and go later. Then they would call me up and be like, "Oh man, I forgot," or I reported this, but I made $13,000 on my side business. Do I have to do anything with that? And it's like, yeah, that's why I asked you, did you do anything else? Because one, if you file a tax return without that, then it's fraud.
Right.
And fraud, unfortunately, results in the criminal penalties. And I don't want that for my people. Right. So forcing us to report, I got excited, like, cool. So now we don't have to pull teeth as tax professionals to try to get everybody to report their income.
Right.
So that's why I was excited about. I understand why everybody panicked, and things like that. But I was like, because let's just be real. That's the problem in our community, right? We have this negative connotation about money and taxes. Like, we don't want to report everything because we don't want to pay taxes. Well, to me, if you are afraid to pay taxes, I'm gonna just be real with you. If taxes is a burden, it's because you can't afford to pay them. And think about that.
Right.
You can't not afford to pay your taxes. That means you're in poverty.
Right.
we need to report all our money on our taxes, because do we know how many things, when we talk about getting the bag, when we talk about building wealth, so many things, so many instruments that we use to get that bag, to build that wealth, is dependent upon the documents. I have so many people, like when everybody's trying to buy the house, right?
Right.
That's when the truth came out.
Right.
When the whole PPP, that's when the truth came out.
Right.
Oh, I've been having this business for years. Why you never told me? Now all of a sudden you trying to report it. Oh, you about to buy a house? Well, they say my income is too low. I got this business. Well, why you just now saying something? Now we got to go back in there. So it's kind of like, I was excited because here we are, transparency.
Right.
You know, I get why people get scared, and I get why the government repealed it, because IRS don't have the technology to differentiate. Okay, if I'm getting X amount of dollars from Cash App, was that personal? Was that business?
Right.
You know, that's to me why they went back and they said, you know what, let's relook at this. We're gonna give it some more time because we need time to work out the kinks. But from a tax perspective, man, I think it needs to happen, because we need to report all our income. If you're not ready to report all your income, then just don't do it.
Right. And that makes sense. You know, I think for me it's not so much the rule, the logistics behind the rule. You know, like I'm a big process guy. So like,
Okay.
I think of it as, man, one, okay, how are we going to do this? Like,
Right.
if the IRS had actually written this and this was published, I actually did a video on this. If a mistake was made, they wanted the taxpayer to reach out to the actual Cash App. Cash App not going to have time. So
Right.
from a process standpoint, that's going to be, you know how hard it is going to be. It would be for me to get Cash App to see
redo
their
the
mistake
form.
and actually rectify it. So
Right.
I'm not necessarily opposed to the rule, because I agree. If reporting it and kind of doing this makes it easier for people to provide the numbers, that makes sense. But we
Right.
got to come up with a way where it can be done, again, where it's not too much of a burden. The IRS is probably one of the most underfunded agencies there is out there.
Absolutely.
And
Absolutely.
tacking this on them could be problematic, you know. So if it, considering the logistics were bad for me, I would be inclined to, hey, just if you want to make it 10 or 20K, that makes more sense, because logistically we're going to have a problem with kind of implementing.
I
But
agree with that.
it's interesting to just, you know, punt it around and see what it does, or how it's going to play out. But for now, they said, you know what, we're going to go ahead and not worry about it. So, you know, I guess that's good news. But the big takeaway is, y'all report y'all shit. Pardon my language. If you made money, please report it.
It's only to their benefit, man. Like if done right, business can be beautiful, right? Like if done right, like I tell people all the time, you know, my goal, my financial goal, man, is to have a tax bill of $50,000. I want to have a tax bill of $50,000. They look at me crazy. And I'm like, see, if you're looking at me crazy, you don't understand how money works. Because if I have a tax bill of $50,000, do you know how much money that means I made?
Right.
You know, and like I say, but that's me. And that's what I'm trying to get everybody to understand. Like, don't be afraid of taxes, embracing them. Really, if we think about it, the average person, if they don't get a refund, the average person only owes between $3,000 to $5,000.
Right.
On average. If we break that down on like a monthly basis, man, let me do some quick math on that, because I always forget the numbers. If we take 5,000 and we divide that by 12, that's like $400 a month.
Right.
If we treat taxes like we do everything else, like a bill,
right,
it won't be such a burdensome. Think about if we took our car note and we paid it once a year at the end of the year, it would be huge. It would be a problem because we didn't budget for it throughout the year. If we took our cell phone and we paid it once a year, it would be a problem because we didn't budget for it throughout the year. So if we treat taxes like we do everything else, it won't be a problem.
Yeah, I agree. I think conceptually though, money is a weird thing, man. Like conceptually, conceptually, it's easy for us to, it's easy because I know I've been this guy. It's easy for me to pay my car note. It's easy for me to pay the credit card bill because I just see that. You don't really get a reminder like, hey, bro, you want to pay those taxes. Like even people with, small businesses, shout out to the people who are entrepreneurs who pay their taxes quarterly to the IRS. Like you guys are the MVP. Right, facts, right?
Yeah. Shout out to them.
Yeah, you guys are like the MVP. So, mentally, that tax bill, even if we know is there, because we don't got something tangible to attach to it in that moment, it makes it mentally so hard. Like that car note, people gonna pay that car note could be $500 and your tax bill presumably $400. But I'm gonna pay that car note because I will have to deal with the repo man sooner than I have to. You just said I got 5 years before the IRS come get me. I'm not saying y'all take 5 years to handle your taxes. I'm just saying, you know what I mean?
No, I mean you're absolutely right, Ben. And if I'm being honest, our government has a huge part to play in that too, though, because our government is not as transparent as they should be when it comes to what they do with our money.
Right,
like you said, me paying my credit card, I know where that money went. Me paying my car note, I know where that money went. I don't have a problem parting with it because I know what the purpose of it was. Me parting with my taxes, you taking my money, I don't know why.
Then you look on the news and you like, how much we sent overseas?
Right, exactly. You know what I'm saying? So our government do have a part in there. So
yeah. I want to go to this comment real quick. I thought this was hilarious because people can line the notes when you talk about Cash App and say it's for food or something else. I will tell you when I got called by people about this $600 rule, this was the remedy that they came up with. They said, I could just put something in the notes.
Just put something in the notes for food instead of business purposes.
I put it was a donation to a team or something like that. So I definitely, find that interesting because, that was something that was actually said to me, But yeah, tax bills are just something that could be a pain in the ass. And it's funny because I guess, let me see. I saw another comment here and I thought this was interesting. Cash App customer service is horrible because oftentimes their best response is there's nothing we can do. And so now
the best response. Woo.
Yeah. And if that's the best response, you would just be stuck trying to, oh man, they made a mistake on this 1099K, but I can't get no recourse. And it was just and I will tell you, the IRS actually did put out guidance. And I got a video, I'll probably link it in the description, where they said if you had a 1099K that was in error, this is how you should do it. And it included annotating a note specifically that you have to write that says this 1099. It was real specific, like lay it out this way when you file your taxes. So I linked that. So if anybody got a tax professional they're going to, if you don't put that note in there, it'll be a problem. They expressly want you to put a specific note in there that you attach to the return itself.
And make sure you have substantiation. I mean, like we said earlier, the IRS isn't perfect. They still are so outdated, right?
Right.
But to your point, by you saying that, should let people know that the IRS isn't as evil as they say. Like they give you ways out. All you have to do is communicate with them. And to your point, substantiate. Like, where's the proof? If you're gonna say that this was, my cousin reimbursed me and if this wasn't a business or something like that, this is a reimbursement. Where's the proof of that? Because if you got proof of that, you send it to them, then you good. Like, I'm never afraid of the IRS. Like, I always, anytime somebody come at me with a letter, let's go. Because as long as we got substantiation, we cool. Like right now, literally today, man, I just helped somebody. He said, man, the IRS after me for $45,000. I didn't report some stock transactions. All right, cool. Let's not panic. Let's take a look. So we go in there and I'm like, well, because the IRS don't see the basis of the stock transactions.
Right.
So I'm like, give me your brokerage statement. Get it to me. I'm like, oh man, you actually had a loss. So instead of owing $45,000, now you got to refund it too.
Right.
You know what I'm saying? So it's like people. They are humans just like us. As long as you have the proof, the substantiation, you have absolutely nothing to worry about.
And I think you hit it on the head, man. You hit it on the head, as an attorney who works in this realm, if something happens and it's no intent there, you have to have the requisite intent for there to be a crime. I've worked cases where sizable amounts of money are at issue, but once we see that there was no intent, we're like, okay, well, can you pay us back?
Right.
Can you pay us back? They get on the payment plan, pay us back, and everybody, you walk away with no criminal charges. We walk away with a one-to-one recovery for the program losses or whatever it was. And
Right.
so I think you can kind of hit the nail on the head with that. Let me jump to this comment real quick. I thought this was the state gonna let you know if you forget to file this. Yeah, yeah. The state is cold blooded, man. Because
Oh, absolutely.
yeah,
Absolutely.
they are much more aggressive than the feds. I'm just
Ooh,
going. I don't know. This is what I've seen in my experience. But if you owe state taxes, they are way more aggressive than the federal government. In
man.
my experience, from somebody who owed taxes before and someone who worked in that arena.
It's just not your experience. It's true. Like California is a cold state, right? So let me give you an example. Social Security, if Social Security is your only source of income when you
Mhm.
retire, right? You have nothing else, then it's not taxable.
Right.
Like you pay zero tax. If the only thing you're living off of Social Security, you could. So I had a client who had a mortgage and they was, living off Social Security. The franchise tax board, which is the California tax agency, sent them a letter like y'all owe us $10,000. And I'm looking at it, and what they did is the state of California said, well, we see that you pay mortgage interest. So we did the calculations based on the amount of mortgage that you pay. We assumed you make this amount of money. And based on this
Mm,
amount of money, you now owe us this amount of tax. And
right.
I'm like, look, in the States, yeah. Now, hey, yeah, if y'all want to be scared of somebody, it's the states. Don't worry about the IRS. It's them states.
Yeah, the states is cold blooded, man. And
Yeah,
with
buddy.
all government entities, hey, you know how it is, man. When you owe them money, when they owe you money, it's gonna take you a long time to get it.
Yeah, yeah,
But that's
absolutely.
with all of them. So let's turn to the next topic, and this is, I kind of think, something that impacts most people. The IRS a few weeks ago actually issued a warning, and they said that, hey, y'all just expect your tax return to probably be lower than what you think is going to be. And so there's some reasons why. So we're going to just talk about these reasons why. So I want people to kind of get an understanding. I got a little bit of notes here, but the first one is the charitable deduction. Now, this charitable deduction, this is the first reason why it may be lower. And I make charitable deductions. I probably should do it monthly, but I always wait to the end of the year, and I'd be like, I send my law school, I send my law school a charitable donation because I'd be like, my son don't necessarily want to be an attorney, but if he do, I want to have a record of donating just in case he got to get in someplace. Hey,
Right, right, right.
nepotism is good when it works in your favor. Okay, legacy, go ahead, man.
Hey, legacy is important, baby. You
Yeah,
alumni.
so with the charitable donation, and this one is easy, so I can jump on this one. Essentially, the charitable donation has been reduced. You know what I mean? It $300 was the amount of the charitable donation that it was reduced, and this is interesting because this applies to like 90% of people, because a lot of people, they donate stuff to Goodwill and they'll give you the receipt and you can write down the items off. But this is probably the smaller of all the three, because charitable donations, there's always been a limit on the maximum amount that you can do for most individuals. I think the second one, and if you could touch on this one a little bit, is the child care tax credit.
Oh yeah.
And I think
Oh
this is
yeah.
a big one because, hey, I just talked about in the video, at one point I was paying more in child care than what my mortgage was. That's how crazy child care was. So can you
Woo.
can you talk a little bit about the changes in the child care tax credit?
Man, actually let me do this, man. Let me share my screen with everybody and I'm gonna see and
Perfect.
I will break it down because that's probably gonna be the biggest, the two biggest impacts to these is gonna be the child tax credit
Right?
and the dependent care credit.
Right.
So let me see here. Oh no, can y'all see my screen?
Yep, we see it perfect, bro.
Okay. So what breaks down here, we can see here, right, for the tax year 2021, the child tax credit, we see it increased from $2,000 per qualifying child to $3,600 for children ages 5 and under, and $3,000 for children ages 6 through 17. Plus, so now that was the thing, right? So we can see that for the tax year 2021 and the 2021 only, it went from 2,000 period, regardless of the age, as long as they were 17 and under, it went to 2,000. I mean, from 2,000 to 3,600 for children ages 5 and under, and 3,000 for those who were between 6 and under 17. Plus, as we can see there, the amount was fully refundable, meaning that even if your tax liability was zero, you would get it back in your pockets, right? Like when anytime you see something's refundable, that means that money is coming directly to your pockets. Let me give you an example how this worked out for people last year. So for somebody having 3 qualifying children, let's just say they were all under the age of 5. They had zero tax liability. They had no withholding, meaning that from their W-2s, they went exempt all year. Let's just say somebody went exempt, they had zero tax liability, they went exempt, they ain't paid nothing into it. They would have had a possible refund of $10,800 just for that. Just for that, without doing anything. As long as they had 3 kids, all under the age of 5, they get a possible refund just for that of $10,800. Okay, last year. But for the tax year 2022, it has now reverted back to $2,000 per qualifying child, regardless of age, as long as they're under the age of 17, meaning 16 and under, of which now only $1,500 is refundable. Okay, so given that same example, if somebody had 3 qualifying dependents, as long as they were all 16 and under, if they had zero tax liability, they had no withholding, then that refund goes from $10,800 down to $4,005 just on that alone. Yeah, so a lot of people is going to be hurt by that, but like I say, we just got to prepare accordingly. Then you was talking about the child and dependent care credit, right? So this one for the tax year 2021, I call it the daycare credit because that's what it's for, right? Daycare.
Right. This is a big drop too, man. This is a big drop.
It is
a big drop.
Because if we look at the numbers, there's just a lot of things to consider here, right? First of all, it increased from $3,000 per qualifying child, and they only gave you 2 children, so the max would have been $6,000 anyway. So it increased from that to $4,000 with a maximum of $8,000.
Right.
Plus 50% was refundable, right? So in this example, let's say you have 2 qualifying children. Let's say of those 3 children we have from the previous example, 2 of them was in daycare. You still had zero tax liability, still had no withholding because we went exempt all year or whatever. That was a possible refund because 50% of it, 50% of 8 would have gave us $4,000.
Right.
So in that scenario, if somebody would have had those 3 children and paying daycare, they would have had what, $14,800 as a refund off top?
Yeah.
Without doing anything extra. But now, here's where the change is. So for tax year 2022, which is what we about to do taxes for now, it went back to $3,000 with a maximum of 6, of which instead of 50%, only 35% is going to be counted as a credit, and it's no longer refundable. So in that scenario, right, 2 qualifying children, zero tax liability, no withholding, the refund goes to 0. So they kind of
that's cool, man. I appreciate the visualization too, man. It's That was dope. I definitely appreciate
Oh
allowing
man,
us
yeah.
to
When
go
when
there.
it come to numbers, we got to be able to see it. Yeah,
Yeah,
definitely.
that's I know you can, boy, being able to put one thing, being able to convey an idea in a visualization on one sheet of paper is so important. I
Yes.
won't I can't tell you the amount of important people, very, very important people that I've sat in a room with, and they don't want to read all that stuff. They
Yeah.
want it broken down
Yeah.
to a chart or graph, presumably with some colors. So, so I had to learn that because when you're talking amongst legal professionals, we always talk everything through. So it's nothing for me to sit down and read a 35-page document, a 45-page document to get it. But when
Mm,
I'm talking to non-practitioners, I need the visualization. That's how you get the results. That's how you show the
right.
progress. So that was definitely dope to show that.
I
The
appreciate it, boss.
the other one, man, they had up here is the earned income credit. Now, this earned income credit, and correct me if I'm wrong, this is for the folks with no kids out there, right?
No, absolutely. I mean, folks with no kids can qualify for it, but this one benefits the people with the kids.
With the kids, okay. So
Yeah.
what was the change? Because I know it in 2021 they made a change or adjustment in the earned income credit to reduce it to, I'm not even sure what it is. I think it was 1.5 $1,500 in 2021. I'm not sure what it got reduced to. You know offhand?
Yeah, because I pulled them up here, and any of these things I'm talking about, man, you can definitely go to irs.gov and validate and do look at it yourself. So the earned income credit, technically, the only people who benefited last year were the people without children.
Right. That's
That's
why, yeah.
yeah, yeah, because for them, the earned income credit went up. Like I think I'm thinking, let me look at it. Last year, for people with no qualifying children, the earned income credit was worth up to 1502. So
Right.
1,502, which is huge because normally if you don't have kids, the earned income credit is probably $200-300.
Right. It's low. Right,
Yeah,
right.
real low, right? So for those, when it went up to 1502, it was like, yeah, cool. So now this year it's back to normal rates. And the
Mm,
max for somebody who will get with no children is $560.
right.
Yeah, so that's yeah. But for
Yeah.
anybody else, people with children, the earned income credit
It was
pretty much stayed on par
right.
because it adjusts for inflation every year, so it
Right.
goes up every year. So
Right.
it'll be more this year than it was last year.
Yeah. And this year, I think last year was 6,700. This year is 69. So it was a
Yeah,
mild adjustment
yeah,
to account for inflation. But
exactly.
if you're watching this video, I'm gonna make sure to put a timestamp on that part where you got that breakdown. But those were really the reasons why whatever you expected on your tax refund, it might be a little bit lower, this time around. So hey, take that with a grain of salt because I don't know about y'all, but boy, back when I wasn't budgeting and was living financially irresponsible, I used to have some plans for that refund check. Boy, I
Yeah,
was
yeah, yeah. People, man, and I'm praying for the culture, man, to be better with money, man. Because I've seen people expect a huge refund, and
right.
because they expect a huge refund, they go out and do all these. Like I had somebody spend their rent money on Christmas because they was expecting a huge refund. And then when they
Man,
filed their taxes, didn't get what they was expected and couldn't pay that rent, man, and ended up having to move. And I'm
right.
like, that's I'm hoping we don't do that, man. And I'm seeing, on social media, you got all these brand new tax repairs coming out because they can make money off the backs of poor people. Let me just say that. You
Right.
know what I'm saying? They're like, because the tax game is easy to be like, oh man, give me 10% of your refund. I can get you whatever you want. So one, that's room for fraud. Why? Because now I'm gonna fraudulently increase that refund so I can charge you more.
Right.
You know, then you got people like, oh, I'm gonna give you an advance, a loan on that
Mm-hmm.
refund, and I'm gonna charge you to give you this loan. I'm like, really? The refund take 8 to 21 days. Most times you
Right.
get it in 8 days. You can't wait
Right.
8
Yeah.
days.
You
You're gonna
you
pay
cannot pay
somebody.
any bill and be fine for a month.
Yeah.
Right,
Like, you
right,
really
right.
about to pay somebody an additional $300-400 just so you can get it in 2 days instead of 8? Like, oh, man, I'm praying for the culture that we definitely improve.
Right. So let's turn the corner now that we got some of the tax talk out of the way. Let's turn the corner. We're gonna talk a little bit about personal finances real
Let's
quick.
go for it.
Before we dive in to financial overrated or underrated, we're gonna talk a little bit about personal finances. Like understanding just and you know, hey, shout out to everybody who watching this channel, but I'm a black and brown person, so I tend to focus on black and brown things because that's what I know.
Absolutely.
That's what it is. You know, and a lot of times, and I've said this on videos before, when we talk about the mindset of money, I see a lot of videos where like, oh man, if you go out and buy Gucci and Louis and all this, and you don't make this, that's stupid. And I want to have a little bit of empathy for people because I've been in a situation where everything around me was so messed up and so bad. I wanted to look good because that's the only thing that I had that was going
Mm,
good. The
mm.
house was dilapidated. We didn't have no heat. The sitting in front of a damn open oven trying to stay warm because the furnace was broken. Nobody could afford to pay it. So when I left out the house, I was like, yeah, man, I made my little bit of money. I want to look good when I leave out of the house because for me, I wasn't really it was the only thing I had that to me gave me some intrinsic value. So when we
Gotcha.
talk about turning the corner just from a mentality of money, where do you think that starts for an individual? You know, like when they turn that corner from seeing what they were doing or what they may have been accustomed to. And I give you my example. For me, it was joining the military was probably the best thing I did that probably ended up saving my life.
Mm.
And the reason I tell everybody that is because I was able to go away from the neighborhood and be experienced and exposed to different ways of thinking, different viewpoints. And so it was two moments where my eyes woke up. One was going to the military and I saw a different view. The second one was when I went to law school. When I
Mm.
went to law school, because I ain't got no lawyers in my family. I didn't have
Right.
nobody. If it wasn't for Ask Jeeves, I wouldn't have knew what I had to do to even apply to get into law school. I was just
Oh.
Googling it. What do I got to do? But when I went to law school, that was really where it hit me like, wait a minute. It's people out here making real money. You know, like for a long time, I had no clue what real money was. I was like, oh man, 50,000 a year, man.
Right, right. We doing it.
I'm doing great. And once and I thought that when I got out the military, I was like, oh man, if I get 60 or 70,000, woo, because Uncle Sam wasn't paying me nothing. But when I got to law school, that was kind of where the corner started to turn for me because I knew a buddy who worked for a big time corporate. He was really big in stocks and he started giving me some gems. I would talk to doing internships. I'm talking to other attorneys and people who are successful in anything. They like to talk about their success. So you can always pick you can always pick their brain. So what are your thoughts on that turning point? Because everybody's not going to go to the military. Everybody's not going to go to law school. So I think the bottom line is when you get, I call it the financial kick in the nuts, where you hit that. It's kind of like when you have a substance abuse problem, bruh, and you hit rock bottom. You know, I feel like that's the turning point for most people that make them kind of change their financial trajectory. What are your thoughts on when is that turning point, and if when do people normally hit that turning point?
Yeah, I mean, I agree with you. I think people hit the turning point when they hit rock bottom, right? Because
Right,
really, when you hit rock bottom, there's only one place to go, up.
right, right,
You know, but I think it boils down to discipline and psychology, right? Like we have to have that balance. I don't ever knock nobody from getting um toys, from having fun, from enjoying the spoils of their labor, right? I just say make sure that, for example, if you're gonna go out and get the Gucci belt, the Gucci clothes, you want to buy the Alexander McQueen shoe, whatever, do it, but do it after you've reached the goal.
right, right,
Right.
right,
You know,
right.
set yourself a financial goal and be like, all right, now that I've got this goal, let me reward myself, because without no reward, we will not do.
You get burned out.
Yeah,
Yeah.
exactly. So
Right.
you have to reward yourself. But like I'm teaching my kids now, you know, money costs a lot. Like E40 said, money costs too much, and I ain't got a dime, right?
Right.
So
Right.
ready now, and I showed him. Now I say, do you know it costs? I think it costs. I was showing them, to make $1, it costs like a couple of pennies or something like that. Like this, nothing is free.
Right.
So set yourself up a system where you can reward yourself. Like if y'all like Nike, make Nike pay for your Nikes.
Right. Right. Right.
And they go, what do you mean by that? And I had to introduce them to stocks. Like, you can buy a Nike stock and watch it appreciate over time. I
Right.
mean, if you get enough of it, then next thing you know, you making money off Nike. You can take that money and go buy your Nikes, but work first, then reward yourself. And I am, and I'm about to embarrass myself, but I don't care, because I want my people to know, man, I come from that, right? I didn't have nothing. My parents growing up on welfare, man, my father being down on Skid Row. It's like I came from the bottom. So the moment I had an opportunity, I squandered it, because I was trying to hurry up and get away from that. I was trying to hurry up and run from that. Like, and here's what I did. My first car, when I got my first job out of high school, right? Working, bagging groceries. Got my first check. Cool. You know what I went and did? Hand to God, I went and bought the rims before I bought the car,
Mm.
and had the rims in the house waiting to get the car. Guess what happened? Never got the car.
Mm.
So now, and I tell that story because we get excited for money. We want to go get something that validates us because we never had. But if we taking the wrong steps, we will never get. Because think about that. Fresh out of high school, that was my first experience with money. Buying the rims before I bought the car.
Mm.
And that mentality, nobody corrected me, nobody showing me, nobody educated me. That carried over into adulthood. And it didn't change until, again, rock bottom, here I am with my daughter, me, my wife, my daughter, and all our family members, here in this 1-bedroom apartment. It's like, yeah, no, something got to change.
Right. Right. It's funny because I did that too. When I would want something, if I couldn't, I remember my first motorcycle. I wanted a motorcycle and I knew I couldn't afford it. But what did I do? I went out and bought a $300 helmet. I bought like a $900 jacket. And I said to myself, if I got the outfit in there, I know I'm getting the bike.
Right. And you know what? Let me not knock that, because for some people that works.
Mm-hmm.
There are some people who go out there and be like, man, I got now I have to.
Right.
You know what I'm saying? So for those who got that kind of discipline, by all means, do what you do. But just be careful.
Yeah, and I agree. I think that's good as long as you have some type of financial order of operation. You know what I mean?
Absolutely.
So
Absolutely.
when I got when I got my finances situated and it was time for me, this was 10 years later. I was like, I'm getting a motorcycle. I did the same damn thing. I bought the helmet, I bought all the stuff, and I didn't get the bike for another 6 to 8 months. You know why? Because I needed to save up some money. I was like, I knew how much the bike cost. I was like, I'm gonna get a deal. So it was a completely different method because my financial order operation was a little bit better. So
Absolutely.
let me ask you, because you talk about kind of having that moment of clarity when you hit rock bottom, right? And I can relate, because I can remember, for me, it was me being married real young, early 20s, and I remember one of the utilities got cut off. Now I was able to scramble and get it back on, boy. I shook out this change jar. I was like, come on, count faster. I'm over there.
Right.
I was like, man, I can't let it wasn't really about me at that point, but I was like, man, I can't put my wife through no craziness like this, man. My wife and young child. So I definitely understand that. So you talk about the knowledge you instill in your children. Let me get your perspective on this. So we know the education part, dropping them gems on them early is valuable. What is your idea when it comes to investing for your child? Because there's two school of thoughts, right? And I'll tell you my method. I think, and again, this is a conversation I just had with my father. I don't think it's a parent's responsibility to make their child a millionaire per se. I think
Right.
it's a parent's responsibility to give them a head start in the relay race of life. You know what I
Yeah.
mean? So my parents not gonna make me a millionaire, but whatever they did, if my pops has a paid off house and when he passes away in another 20, 25 years, hey, he did what he needed to do to put us in a better position because he didn't grow up with a paid off house in his family in his possession. And
Right.
so I see some of my YouTube family, they like, hey, I got this investment account for my kids and I invest money. And my kid can be a millionaire by this age, and that's dope. I don't knock them for that. But maybe because I come from a culture of if you don't do it yourself, you really not going to appreciate it. So my son, he just turned 16 in December. Christmas baby, day before Christmas.
Oh, we.
All the money in his investment account is what he's put in there from his summer job, is what he's put in from his Christmas money. When he get money, he'll be like, put this amount. And so one day we looked at his investment account and I was like, look, man, now college, I feel like that's more my responsibility. I'll save for
Mhm.
that. But he had about $700 in there. And so
Oh,
I went up to
nice.
him and I said, man, you got $700. Now he already got, I did a video when he saved his first $1,000 for his little emergency fund. And I'm really proud of him. When he had that
That is.
$700, I said, man, you got about, I said, look at your investment account. He was like, oh man, that's pretty dope. He see his little dividends payment of 13 cents, 24 cents.
Still, something
And I
is better
said,
than
look,
nothing.
and this was my view. I said, look, man, you got about $72,000 in there. And he was like, what? It's only $700 in there. I said, think about the math. I said, at the age of 20, every dollar you invest is worth $88 when you turn 65. You
Mhm.
16. So let's multiply this 600 somehow almost $800. Multiply that by 88. And that's what this money will be worth at 63, 65 when you're ready to retire. And when I
Man.
told him that, it put the numbers in perspective. So what are your views on that? Are you now? I will say, if I want to invest for my son, I will do that, and I'm not saying I'm not going to do that. But my view right now, and I know he don't watch my videos, I just got to talk him to death. But my view right now is he need to learn that process on his own, and if I'm gonna do something for him separate, he don't need to know nothing about it at all. I
Yeah,
want
no.
to, I want to see if he can build up the habits, the good financial habits, and if he can, you'll probably get more assistance. If you struggle a little bit, sometimes people got to learn through the school of hard knocks. You know what I mean? So, what are your thoughts on that?
I am in 1,000% agreement with you, man. I believe that if we do it for them, they'll never learn. Never learn, man. That was
Right.
a quote I heard. I don't know where I heard it from, so I can't give credit. But the quote was like, "My father." I'm pretty. You probably heard this too, where the man said, "My grandfather rode a camel, right? My father rode a Mercedes. I drive a Range Rover. My kids will drive a Mercedes. My grandkids will probably ride a camel." And it was like that
Right, right,
that
right, right,
progression of cycle, because if we do everything for them, they won't know what to do. And if they don't know what to do, they can't teach the next generation. Right.
right,
So then, like you say, if we great grandfather started off on the camel, the great grandkids will end on the camel, because that's that mentality. Like, I'm gonna do it for you. I got you. I'm gonna get you $1 million. Right. Jim Ron, one of the greatest business quotes, he said he feels sorry for the person who inherits $1 million but don't know how to be a millionaire.
facts.
So it's kind of like I 1,000% agree. Like, when it comes to my kids, yeah, they have investment account. Gave them a starter. From there, you got to learn what works and what doesn't work. You
Right.
got to understand what's going on, what's happening. Because I tell them all the time, I ain't gonna be here 100. I mean, man, it is guaranteed that I am going to leave this earth one day. Then what
Right.
you gonna do?
Right.
So I agree with you. Like, help them. Best thing we can do, man, is have financial conversations. Um, make it fun.
Right.
Like, I don't have no. Wait a minute, man. I got a bunch of fake money we always playing with, understanding challenges. Talking about everything. I just enjoy having the financial conversations with the kids.
Right.
Yeah, but for them, like, you got to choose what you got to do, like savings, investments, earnings. Understand? I say, because even if you don't become an entrepreneur,
Mm-hmm.
I want it to be so where even when you get in a job, you can negotiate the highest possible salary because you are that much aware.
Right.
And that's my goal.
Right. And I tell people this all the time. I say when you financially over leveraged, it being financially over leveraged, and once you get your stuff together, I don't care what your job is, if it's an entrepreneur or if you're working a W-2 employee like myself, it's a different vibe.
Yeah,
When I go to work right now, because I know, like, man, I'm sitting on 6 months of an emergency fund. I'm gonna
man.
get it up. I'm gonna get it up to 12 months. My stress level is I mean, I can't even explain it. I can't even explain. Like, I literally just put my wife's car in the shop because I was like, I want to keep it running because I'm probably gonna give it to my son if he
Mm.
decides he want to go. If he don't ever to say he want to go get a license, hey, you can drive when you're in college for all I care. I ain't gonna force you. But I went and I remember I went to my wife and I was like, oh man, the bill was 5 stacks. And
Oh wow.
I'm not saying this to brag. I was like, the bill was $5,000. And I said, you remember when we had a $300 water pump on a Chevy that was a problem and it created a whole stressful situation.
Yes.
So I think that's the biggest takeaway. No matter what you do, for me, I just want my kids to be self-sufficient. I don't care if you're an entrepreneur. If you're a barber, I don't care what you do. Long as you're doing something legal that can take care of yourself, provide for your family, and you have the fundamentals of financial knowledge there so that you are in a position to give yourself options. That's
Yeah.
that's
Yeah.
that's kind of all it is right there for me. But that's interesting because I know some people who are investing for their kids and they're going to be a millionaire by the time they're 22. I love my son. If, my son, a millionaire at 22, he gonna jack it up. Now,
Yeah.
my daughter,
Definitely.
my daughter, she learns from watching his mistake. That's the benefit of being the youngest child. my son eats,
Absolutely.
yeah, he eats the hard lessons, and my daughter like, I'm not gonna do that. So you also
Yep.
got to know what you're working with your kids.
Exactly. Yeah, exactly.
That's funny, man. So let's turn the corner, man. We're gonna talk a little bit about this because I always like to do this. We're gonna do financial overrated or underrated, right?
Let's go.
Now I had a intellectual savage. They actually left it in a comment, man. One of my videos. It was like, should I do an LLC for my YouTube and SD thing? Now, I'll tell you, I thought this was the realest advice I could give them. This is not advice. I said, I only could tell you what I did, but I did what I did solely because of my profession, and it's burned in my head to do it this way. I said, in hindsight, it was no reason for me to file an LLC. I wasted $700. In hindsight, I wasted $700 filing an LLC and about $150 a year filling out additional requirements because it's not generating enough income for me even to do that for it to be beneficial. You know what I mean?
Right.
So that was, I just gave them what I did. But what are your thoughts on everybody who's starting a business and they like, oh man, I could be a sole proprietor. I could just do it under my own tax social security number. But everybody, everywhere I turn is some guy on social media telling me to file an LLC because I could get a big car by doing it and not pay for it. So what are your thoughts on starting a business, new entrepreneur, or you're in that first 1 to 3 years? Do you need to file an LLC? Are LLCs overrated or underrated?
Over. Do y'all hear me? The mic work? Overly overrated. Extremely overrated. I think LLCs right now are more of a trigger word than they are a benefit to anybody.
Right.
Because when you hear LLC, people ears perk up and they automatically think that I'm gonna be winning once I get an LLC. Like lately, I've been hearing a lot of people say, if you want to get 250,000 in funding, here's what you got to do: get the LLC, get the EIN, open up the bank account, and then they slide in the fact that you personally had to have a 680 credit score. And I'm like, well, if you personally got to have a 680 credit score, what's the purpose of the LLC? You see what I'm saying? Like, and people not putting two and two together because they're being blindsided by the fact that, oh, there's this huge number in my face. I can get access to 250,000 if I have an LLC. And I'm like, please pay attention to the fine print.
Right.
It don't work like that. Now, don't get me wrong. LLCs have their place in business. They do exist for a reason. They have their place in business, but it is not what people think. 90% of the people, I'm gonna venture to say 98% of the people who have LLCs do not need them.
I agree.
It's costing them more money than they need to. Like especially here in California, man, we look over a 5-year span, it'll cost you $4,000 to have an LLC just to have the name.
Right.
Whether you make money or not, you're paying this $800 to the state of California, where there's a cheaper alternative, the DBA. It costs you $125 for 5 years. So you spend $125 in a 5-year span versus $4,000 in a 5-year span.
Right.
But we not looking at that. So when it comes to LLCs, I think they are extremely overrated, not needed. For me, my threshold is get an LLC when you make profit of $100,000 or more, not gross.
Right.
Which most people don't understand the difference between gross and net. Like when you are netting net profits of $100,000 or more, then get the LLC.
Right.
Until then, please don't.
Right. I agree with that. I know the way I was kind of taught and trained up on it is, if you have a profession, because again, I'm an attorney, I think of everything from a risk standpoint, reducing your liability. Look at the profession that you're working in, and what is the likelihood of you making a mistake that could cause you to have actual litigation outside of small claims court? So if I looked it up in my area, small claims court maximum is $6,000, and I got a landscaping business. What are the chances, if I want to file an LLC, what are the chances in my landscaping business I could potentially be sued for more than $6,000 of exposure? If it's a high likelihood, you might want to think about it. Chances are you're not going to be sued for anything outside of small claims court, $6,000 or less. So from a risk standpoint, so that's the way that I was taught to look at it from a legal standpoint. If you don't have a job where there's a sufficient amount of risk that'll put you in big boy court, it's not even worth it. You know what I mean? It's not even worth it. Yep. So I think I definitely agree with you on that one. Now,
if people are concerned about risk, man, business insurance is a beautiful thing, and it's a lot less cheaper than an LLC.
Right. And that's the thing, when you're doing depending on the type of job you're starting, a lot of jobs require you to have some type of insurance or some type of surety or something like that. So, there's other alternatives out there. So I definitely agree with that one. This is going to be an interesting question coming from, the self-employed tax guy. Overrated or underrated? Being an entrepreneur, is it overrated or underrated?
Overrated. Oh my God, it's so overrated. Being an entrepreneur is overrated, man. I'm trying to get people like, I want to start. Why? Why? I feel like I'm preaching. Wow. Well, why do you want to be an entrepreneur? Are you sure about that? It's overrated. It's overrated. I love entrepreneurship, but I love it for the people who is actually made for it.
Right.
You know what I'm saying? Like, people get this idea, like, I want to be my own boss. Like, do you? Because most people go from being an employee to being an employee and not even knowing it. They think, I'm an entrepreneur. So technically you're not. You're still an employee, because the only thing you did was to create another job for you to do.
Yeah. So I define self-employment and entrepreneurship as two different things.
Yeah, absolutely.
Yeah. Self-employed, if you don't move, you don't eat. Entrepreneurship, for me, the definition is if you could take 3 to 6 months off of not doing whatever the hell it is you're doing, and you get the same revenue, the same cash flow, congratulations. I think you have reached that level where you're no longer self-employed, you're entrepreneur. You got a business
Yeah.
model and a business process that can
Yes.
continue whether you're in it or not. You know what I mean?
Absolutely. I mean, and that's what a lot of people, like I say, I mean, I think people are confusing the term entrepreneur with side hustle. Because that's what
Mm.
a lot of influence are creating for people, a bunch of side hustles. But think about the statistics of that. This year alone in 2023, there will be 4 million new businesses started, yet 80% of them will be shut down within 18 months.
Right.
You know what I'm saying? It's like, because people don't understand, they get this granular, like, man, I'm about to be a boss. I'm about to be working from a laptop and a beach, sipping a pina colada. And you get into this thing and you're realizing that it ain't a 4-hour work week, it's a 60-hour work week. You know, yeah, you doing what it is that you do. You're the in the book called The E-Myth, they call it the technician because you're the one that's doing the job. But
Right.
it's so many other jobs that need to be done
Right.
that's needed in order for your business to be sustained. And if you're not doing those other jobs, then the business is crumbling in the background. So
Right.
it is extremely overrated, bro. Oh man.
Yeah, I agree. I feel like we gotta respect W-2s a little bit more. I remember
Yeah.
out of law school, once I passed the bar, I was like, oh man, I'm a, the law school I went to is a HBCU. A lot of, I mean, it's probably, I want to say 70 or 80% of the people who graduate, they go into public service. You know what I mean? A lot of
Okay.
people that own practitioners. So I hang up my own shingle, and man, like now it would probably be a little bit easier, but I just caught so much stress because I was not only learning the business aspect, I was actually learning how to practice law. You know what I mean? Like
Right.
at least now I know how to practice law. I could do that with my eyes closed. Let me focus on the business stuff. But then, man, trying to learn how to juggle the business aspect and learn the practice of law, I was like, you know what? I need to find a job where I can have some water cooler talk because it wasn't no water cooler talk. I didn't have the time
No,
to enjoy anything.
man, no, not at all. And like you said,
Office,
much respect to the W-2 people, man. I've seen W-2 employees where their withholding alone is
right?
more than what most average entrepreneurs make in a year.
Yeah. So
You
yeah,
know,
it's
so don't ever knock the W-2.
yeah. You can if entrepreneurship is your route, I'm not knocking it. Just know that to be successful as an entrepreneur, it every business venture I had, and I had a successful freight brokerage company
Oh
because I
wow.
told you my pops had a big rig trucking company, and I was like, man, if we did a freight brokerage company, we can be that go between the
Right.
supplier and the trucking company. We can snatch up all that money. It was a successful company. I never worked so hard in my life. I was like, when I got to law school, I was like, I tried to do that in law school. I was like, we
Mm,
got to hire somebody else, man. I can't do this. Like,
mm, mm.
and it was one of those things like, is running this company and getting it off the ground my dream, or is that like me trying to fulfill like my pop's dream? And I was like,
Right.
hey,
Right.
hey, dad, I love you, man, but the hell with this, the hell with this freight brokerage stuff, man.
Man,
Okay,
that's
so
that's that's a great question to ask yourself. What am I doing
yeah,
this
man,
for? Yeah.
I gotta live my dream, man. I respect the you and everything, but that's kind of what it was. Now this one is interesting, and you can give me your personal take on it or not. But this is always a fun topic: family, finance, and relationships. Okay,
Okay.
now I tell people one of the biggest financial mistakes I ever made was I carried over dating and engagement money habits way too long into the marriage. Had I realized that and done something different those first 5 years in my marriage, we probably would have been ahead financially, but we still were doing the. So what are your standpoint on? And this is more of a just your personal opinion when you're dealing with. Uh, my provision from a legal standpoint is if you aren't married, don't share nothing, don't create no partnerships, don't buy no house together,
Boy,
because
you better preach it.
it's going to end in a colossal disaster if
You
something
better preach
happens and
it.
somebody passes away. But for the folks out there who are married, what is your position on finances? Do you take the more combined everything approach, separate approach? What have you seen just in general and in your personal experience to be the path for success more often than not?
Well, for me in my marriage, man, I have a complete, at least financially, we are open, right? We have a
Right.
joint checking account. See, the only thing that is separate is the business account.
Makes
That's
sense.
that's really the only
Right,
thing that
right,
is separate, right? But
right.
she has access to the business bank account. She can look, she can know the codes, everything else. So to me, as long as everybody's on the same financial page, it shouldn't be an issue. I know some people like to say, well, you should have a joint account that pays the bills and then have separate accounts where you do what you want to do.
Hmm.
And I'm a numbers guy. I'm cool, you know, but I'm like, we can still have one account and manage it through a budget. So
Right.
we don't need separate accounts. If you want to say, you know what, I'm putting $4,000 away for me to do what I want to do. All right, well, we just gonna put that in the budget. You got 4,000, and
Right,
we will account every time. We don't need separate accounts because
right,
to
right,
me, now
right,
I could be, you know, having issues from my upbringing coming to growing up the way I did. But like if you trying to hide something, I'm like, why?
right.
But again, that's me. Not everybody look at it like that. Some people don't want to have to explain why they bought XYZ. That's why they got their own separate account. But to me, like, think about that logically. Whether you got a separate account or not, if you come in the door and somebody gonna ask you the question what that is, that's gonna be the same.
Same
Whether
difference.
you, yeah, it's
Right,
gonna be the same. So
right.
getting separate accounts to me is everything. People make things sound so good.
Hmm.
But if you look at it from a reality standpoint, from a logical standpoint, what really is it doing but create more of a headache?
Right. Yeah,
Again, my opinion. I know
right. And
some married folks be like,
that's
nah, we need these separate accounts. You stay out of my business, I stay out of here. Hey, if that's how y'all work,
so.
cool.
I'm gonna be honest. I don't even. We're a separate account. We got joint account where everything goes to. Everything goes when that paycheck hit. Everything goes into that account, and I specifically carve out an amount that hey, this could go into your account. This could go into my account. Now, in theory, we never transfer money because we're people who we use our credit card for all our budgeted expenses or whatever. You know what I
Mhm.
mean? But I'm gonna be honest, like this has always been my view. Whether if my wife's allocated fund money for the month for her to do whatever was $350, she don't put it in her account because we just swipe the card and just allocate it in the
Exactly.
budget. But
Exactly.
as long as the budget numbers play out, this is always my position. If you want to go to the Magic Mike 3 concert and see a stripper with a bow with a collar shirt on with no shirt, just a collar, have at it, Hoss. Like
Right.
I've been married so long, dog. Like, hey, 16 years in a few weeks. Like, I'm
Oh
completely.
wow.
Hey,
Congratulations, man.
hey, I appreciate it, man. I'm completely. Now, if this was year 1 through 5, I'd have been like, hey,
Something
hey.
different. Something different. Hey, it's gonna be some furniture moving around here.
Yeah, you're 16, man. Do whatever, hey, whatever it is you want to do, as long as the numbers are accurate and fall into place, everything goes in this. And it's funny because I follow I don't know if she still make content on that, but her channel was so interesting. Her name was Sharia Mack, and she had a YouTube channel. And she actually started her own business and quit her job because her business kind of took off. But
Mm.
I always found her channel interesting because she would always start her videos out as a single woman paying debt alone. And I was like, what the fuck is I gotta edit that out. YouTube going to get me.
Hey,
I
it's
was like,
only in the
what?
first 8 seconds if you cuss.
Okay,
Yeah, it was only the
I was
first
like,
eight
a single
seconds.
woman paying debt alone. What the hell does that mean? So I'm watching videos because I like seeing people journey to, if you're
Right.
starting a business, a fitness journey. I just like the progression. So I dive into the videos, and in one video, she said we had combined incomes. So my husband got out of debt. Then once he got out of debt, it kind of changed, and everything was like, oh well, let's split up the money again. And I
Mm,
was like, so like, hey, and a lot of people, if you're in a relationship and you keep things separate, sometimes there could be a good ass reason for that.
yeah,
It could
could
be
be.
it
Could
could be
be.
someone's not good at managing money. But what I found for me is the transparency allows for so much more progress. And I did myself a disservice those first 5 years when we just stuck to, I pay this, and this, you take care of this, and everything else is whatever you do with your money, you do whatever you do with my money.
Right.
I feel like I cheated myself out of a significant amount of improvement I could have had probably in our net worth had we done it
Yeah.
combined from the front end. But hey, in your
Yeah.
mid to
I'm about
early
to say because
20s,
transparency also allows for great financial conversation too.
right, right,
Yeah,
right,
it
right,
allows for those difficult financial conversations as well. But those
right.
difficult financial conversations are needed for progress. So I love it.
Right. The only thing I the only thing that I find interesting every now and then, I know once my wife went out with some of her friends. If y'all watching, I love y'all. But she went out with some of her friends, and I guess they asked her a question about something like her cell phone provider. Now, this is how it goes financially in my house. I pretty much do 98% of everything. I,
Hmm.
this is okay. But if this is your 401k invested in this fund, and this fund. These are where you're going to go to get the most growth. Then we can reallocate it as you get older to reduce some risk. But I pretty much now she has complete access, transparency, and visibility of everything. But she
Hmm.
just chooses, hey, I'm not going to worry about it because I know that things are being taken care of.
Yeah, because
So
my man
she's
is doing what he's supposed to do.
yeah,
Yeah.
she's out with her friends, and it all started with a question about cell phone provider. And her response was, I'm gonna be honest, like, I don't know how much we pay for our cell phone bill. I know it's T-Mobile because when I cut it on, it say T-Mobile, but I don't know how much we pay for our cell phone bill. And this selective group of friends, I guess they must have asked her a few questions, and she came back, and this was the conversation. She was like, "My friend said that I should know more about certain things," and I said, "Look, all the bills they come in the mail. You are free to open them."
Man,
I was like,
man.
I said, for me, I'm gonna be honest. I would love to switch roles and not have to. You handle 98. You handle all the finances, and only thing I gotta know is when I need something or when I swipe this card, the money better be there to work. And my vision of what I expect for retirement should still come to fruition. Man, I would love to have that type of stress.
You know what
So,
though? To her friends, no
right,
disrespect to them, but that what they trying to do is project they own personal financial insecurities and issues onto your wife. Because a lot of times there is a such thing as financial abuse, right?
right,
Like even the IRS codes governs relief for it with the innocent spouse relief,
right,
because
right,
we
right,
understand that people purposely hide money, but that's not what you're doing,
right, right,
right?
right,
Your wife is just like, she's in the position where like, man, you know what? I don't know. My man got me. It ain't the fact that he or you are purposely saying, mind your business. Don't go in this bed. None of that. It's just that you handling your business and she trusts you to.
right, right, right.
So for the girl, you need to know more. That's because you dealing with somebody that don't want to be honest with you.
I'll tell you the first question I had, I was like, what friend is this? And do they got a man?
Exactly. Exactly, Morgan. If you ain't got no man, you can't talk.
I ain't
You
even
can't
gonna
talk.
lie.
Man. Boy,
If it's coming from a friend who ain't been married for at least 7 years, I don't want to hear it.
man, that was one of the arguments me and my wife had in the very beginning. Cause her single friend, I'm like, a single woman can't give advice to a married woman. I'm sorry. I don't
Right,
care who it is, what experience
right,
they had. If they ain't married and been committed,
right.
then yeah, you hey, don't speak on it.
it's just different, man.
Yeah.
Like I said, it's just different, and I don't, when I have questions about like, oh man, or is this something I wanted to kick relationship with, I'm never asking any of my single guys. Why would I?
Not at
That would
all.
that would be like I won $1 million in the lottery, and I go to somebody who never had $1 million before and ask them, what do you think I should do with this money so that this money could, man, they gonna have you
Right.
buy. Yeah, so you gotta be around like-minded people. And me
Absolutely.
personally, I like talking to old ass married people.
Yeah,
People who've
man.
been married like
Yeah.
60 years, man.
Yeah, man. The ones who've been in the game for a minute, they gonna sit you down like, son, woo, let me
Yo,
tell you.
this is we've been going for a while, man. This is gonna be the last question
Okay.
that I'm gonna ask, and this is another topic. Hey, this is gonna be great content right here, right?
Uh-oh,
Now we
let's go.
talked about financial infidelity, right?
Mm-hmm.
And we're gonna take personal out. We're looking at it from an objective standpoint. So not you and your situation, but a question that I posed. I said, which one is easier or tougher? Which one is tougher to overcome? Uh, Infidelity or financial infidelity. Now, let me put it
Mm.
into context, right? Let me put this into context
Ooh,
because
no,
I heard a call. Both suck. We don't want
right,
either
yeah.
one,
Woo.
but both suck. But we asked which one is the easiest to overcome. And I heard a call. It may have been Ramsey or something, but it was pandemic time, mortgage moratorium, so they didn't have to make any payments. Even though they could have made the payments, they didn't have to. The wife put in the application to qualify for the moratorium. Husband is giving her the money, thinking the mortgage getting paid, but there's this moratorium. So the wife is just taking that mortgage money, spending it, doing whatever.
Mm.
Now, the condition of this, hey, you don't got to pay your mortgage for 12 months, but once this 12 months is over, you got to
Yeah.
pay you got to pay 2 months of your mortgage, then you go back on your regular 1 month thing. Well, lo
And
and
they just
behold,
deferred it. They ain't
yeah,
get rid of
yeah,
it.
they just put it on the back end. That's all they
Right.
did. But what she did was, husband thought the mortgage was getting paid. She spent that money, racked up $20,000 of debt on top of that. And so I said, there's no way in the world. I guarantee you. I said, this is just me. I guarantee you, her husband would say, can you just have an affair for 2 or 3 months? Because now they don't have their mortgage is behind. They may lose their house. So my take was, I guess it depends where you're at. If you ask me when I was 21, 22, 23, newly married, I didn't have much. I didn't have much. So no,
Right.
don't cheat on me because I covered this because I can't even fathom losing the money because I don't got anything.
Right.
Now,
Right.
as I get older, I realize, hey, both are terrible, but I know a lot of couples who had infidelity and they worked it out and their marriage went on to do great things and was stronger than ever. The financial one, that changes your lifestyle. I feel like I personally
Right.
think that one is a harder one to overcome. What are your thoughts?
Oh man,
They
that is
both suck. They both suck.
that's that you right, man. That is a good one. Even objectively, man, that's a tough one for me, bro. I'll be honest with you. Because financial infidelity, man, it hurts the same
Right.
because it stems from now I can no longer trust you.
Right. And,
You
and and
know,
before you finish up, because I know everybody always went to the, well, what if you had a baby or something terrible? We assuming in this infidelity example, it was just an occurred event, no extra stuff came to facilitate it. That's the
right,
only way you could keep it. You see what I'm saying?
right.
Right.
Nothing else came about it, but yeah, no, man, it's because for me, I go hard when it comes to trust, right? So
Right.
again, I'm trying not, I guess, not trying to put myself in it, but jeez, boy,
They both terrible as hell.
they both are terrible in here. And I'm thinking, what's the recovery process from it? That to me, that would determine which is worse. How the recovery process, because from infidelity, right? It's obviously, right, there's going to be some sort of counseling
Right, right,
involved.
right, right,
There's
right.
going to be definitely somebody going to be raising the eyes. up, but as long as I can physically see you and I know you ain't out elsewhere and things make sense, then my trust can be gained little by
Right,
little.
right,
But financially, man, you could be on your phone making transactions and I don't know it. So financial infidelity may just by a hair
right, right,
be
right.
above infidelity, bro. Because the recovery from that one, man, it's like you'll never trust them with your livelihood.
Yeah, yeah. And I think you hit the nail on the head. I think the recovery for financial infidelity is more difficult because you did something that changes our way of living.
Absolutely.
We might not be able to enjoy the same lifestyle versus, I mean, like, okay, Jay-Z and Beyonce had infidelity, but I bet you if Jay-Z would have went out and did some crazy financial stuff, it'd have been a wrap.
Yeah, absolutely.
So I definitely think that's a good point, man. Yo, this has been a great, very entertaining
Oh
live,
man,
brother.
it has been cool. I appreciate being
Man,
here, bro.
I appreciate you coming on, blessing the channel. Like I said, before we get out of here, man, go ahead, give the church announcements, let everybody know where they can find you. I'm gonna put everything in the description box. Y'all make sure y'all check out the Self-Employed Tax Guy.
Man, really, man, they can find me in one or two places, bro. YouTube, bro, that's why I go do all my free long form content, educating us on why we don't need LLCs, right? Like definitely putting it out there. So YouTube is the first place, and then on Instagram you can find me out there chilling. If you want, I think that's pretty much it, bro. I'm gonna say YouTube and Instagram is where you find your favorite uncle cousin hanging out, and as far as information, man. I got a book learning teaching people how to protect their profits. They can go to Instagram and click on the link in the bio and get access to anything that I offer if they want to learn more. But outside of that, man, hey, this is where I am. Chilling here with Debt-Free Dad, having good conversations, trying to educate the people, helping us be successfully self-employed.
Hey, brother. Hey, man, I appreciate you blessing the channel. And like I said, we definitely got to do it again, champ. Yo,
Absolutely. I'm here
everybody
for
who
it.
tuned in, hey, we appreciate y'all. We grateful. Y'all have a blessed weekend. Watch some football. Don't sleep on Tom Brady now. Don't sleep on Tom Brady, Cowboy Nation. I know I'm a hater, but don't sleep
Oh
on Tom
boy.
Brady. Y'all take care. Be blessed. Peace.
Indeed.